Hello traders, Gary Wagner here. It is 2:25 in Honolulu, 7:25 in New York on Thursday, 17th day of February, 2022, and this is the Daily Report for gold and silver. The precious metals had dramatic gains across the board, this concurrent with mild dollar strength. Gold prices surged $29.20, taking the most active April futures contract 1.56% higher, and most impressively, back above 1900. Gold traded to a high of 1904, a low of 1869.70, and is currently fixed as of 5:50 Eastern Standard Time at $1,900.70. The largest percentage gain was in palladium futures, which shot up 4.35%, $98.90, with the most active March contract currently fixed at $2,370.50. Platinum futures gained 2.75%, a total of $29.30, with the most active futures contract currently fixed at $1,093. Silver gained just over 1% today, and after factoring in today's net gain of 24 cents, we have the March contract currently fixed at $23.84.5 per ounce. Gains across the board in the precious metal occurred in light of fractional to moderate dollar strength, up 0.17%, with the U.S. dollar index currently fixed at 95.855. We did raise our stops tight today after moving them concurrently for the last couple of days. Once it broke above $1,900 per ounce, we felt it prudent to lock in as much profit as possible. We will discuss our current trade in full detail, including where we moved our stop to when we pull up charts and look at our technical studies. First, I do want to discuss our current trade. We entered that trade at $1,790. We have been methodically raising our stops, tightening them to lock in profits. The reason for moving them so tight is that it has become a war of words, and there is absolutely no certainty to how this tension will become resolved. Therefore, this morning we sent out a special trade alert, raising our stop to $1,897. That guarantees us a trade resulting in a profit of $107, which, based on a 100-ounce contract of COMEX gold, is over a $10,000 gain per contract. We are currently trading overseas, and gold is up 60 cents from the close in New York at $1,901.40. We are looking at a daily chart in which we have created an extremely long-term resistance line, fixing prices to three basic data points: the all-time record high at $1,880, the top that occurred at approximately $1,880, and this lower top at approximately $1,850. One thing is clear: we've had a clear and decisive break above resistance, and this line, I believe, will now become a support line. Which takes us to our current model and longer-term forecast. Our forecast is based on Elliott wave as well as Fibonacci extension. This model assumes that we had the conclusion of an intermediate fourth wave in March of last year, with gold trading at $1,678 per ounce, which took us into a intermediate fifth wave. We had a wave one, which took gold from 1678 up to 1920, and then we began a long and protracted correction that unfolded as a compression triangle, typically composed of 5 legs and then a thrust. The thrust did occur recently, and we are under the assumption that this is the conclusion of our subcount wave 1, our subcount wave 2, and we are now in a subcount of wave 3. The question is, where could wave 3 go to? But more importantly, we are under the assumption that wave 3 will be composed of a subcount behind that, and that subcount will be composed of a series of 5 waves. And that 5 waves could be something like 1, 2, 3, 4, and the final 5th wave would take us up past 2000. It is where these subwaves will begin and conclude, which is an unknown, especially when we are currently in the subcount wave 1, because that is our benchmark wave. So what we can do is postulate based upon recent highs in the market or tops. So we could see a conclusion on our subcount as early as 1920 and then go into some sort of a corrective mode. We could see it occur here. However, if it continues to climb higher prior to a correction, my next target would be $1,961. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekend review. Bye-bye.